Well, good morning, traders. This is the third video in the Forex Trading School. And what I want to talk to you about today is the bid-ask spread. You've probably heard me talk a little bit about that in a couple of the other videos. That there's no commissions in Forex, but there's a bid-ask price. So here to review my notes, it says Forex brokers will quote you different prices for a currency pair, the bid-ask. The bid is a price which you can sell the base currency at, and it's always going to be lower than the ask. The ask is a price which you can buy the base currency as. The difference between these two prices is known as the spread or the bid-ask spread. This is the commissions that the brokerage firm gets when you place a trade on their platform. So what they do is they will buy it or sell it and mark the price up, or so that's how they make their profit. The spread is usually measured in pips, which is the smallest unit price movement of a currency pair. For most currency pairs, 1 pip is equal to 0.0001. In other words, it goes 4 decimals. That's 1 pip. And here I have an example of a 2 pip spread for the euro dollar and the US dollar. So the lower price is the 1.1051, and that's what you could sell it for. The 1.1053 is the higher price, that's what you can buy it for. So in this example, you're down 2 pips. And if you decide to go long and buy it for the 1053, you could sell it immediately for 51, but you would lose 2 pips. So in other words, it has to go up 2 pips in order for you to reach break even. Okay, if you decide to go short and sell it, you're going to get the 51 when you will have to pay 53 to buy it back. Again, then it will have to go down 2 pips for you to reach break even. So how much is a pip? Is a question I get asked. It all depends on your lot size, and we're going to talk more about that later. One of the things about Forex, most of the times, stock trades are, the common is 100 shares. You put in an order, it's commonly 100. You can buy a single share of stock or 103 shares or 37 shares, but usually when you talk to stockbrokers, they talk everything's 100 in increments of 100. Okay, future contracts, they've got these micro future contracts, or the whole future contract that you can buy, and that will determine the amount of money that you put up and the multiplier of how much you make or lose based on what the market does. Forex is the same, and for example, in this particular example here, this guy is buying 1 micro lot. Okay, on the euro dollar, that would be equivalent to 10 cents for 1 micro lot. So as you move this over, you just keep adding a 0 to everything. If you bought the 0.0010, it would be 10 cents. It'd be $1 per pip. And as you move over, it increases in value. And we'll go into more of that in detail later. Okay, if you're located in the U.S., I recommend that you, if you're going to open an account, you open with a broker that is regulated in the U.S. In other words, he has certain rules and certain capital that they have to have in order to be a broker. Okay, it's not a mom and pop shop in a dark alley somewhere. Okay, it is out in the open. These are very big public companies. There's 3 brokers in the United States that I'm aware of, and these are predominantly the big 3: IG.com, Oanda.com, and Forex.com. All of them offer free demo accounts. Go to all 3 of them, look them over. Look over the bid-ask spread, is they are different, but sometimes you are If you go with a broker that the bid-ask spread is higher, you're getting maybe a website that has more bells and whistles on it, more charts, easier to navigate. There's a reason you're paying a little more bid-ask spread in order to utilize that broker. So go and look the sites over, open a demo account with all three of them, and trade. And then when you get one that you like, you're satisfied with, and if you want to go to live money, all three of them offer live money. So I hope you learned something for this here today, and look forward to lesson number 4.